11 January 2023, Wednesday, MAO with Cal, the battle between Morgan Stanley versus JP Morgan. Now, just in case you want to ask this question, right, are they related? They are not related at all, okay? Different entity, different investment bank, all right? So why we put them versus? Because one of them are calling for buy, one of them is calling for sell. This is interesting. I'll tell you more in detail shortly. Now, before doing anything, make sure that you do your risk assessment, and thank you, AIMS, for the kind sponsorship as always. Now, first of all, let's recap what happened last night. The Dow Jones up by 186 points, the Nasdaq up by 97, and the S&P 500 up by 27.16 points. Wow! That means it's back above the 3,900 level. Now, yesterday we're talking about 3,900 is a very important level, and we mentioned that if the market is going to be a sell order, the market sell if the S&P is above 3,900 level, and of course right now it's higher. Okay, so at the moment now seemingly one of the house are not making money, at least on the losing side. So Amazon up by 2.87%, which I mentioned to tell you that Amazon will be a buy because a lot of buying calls are coming in right now for Amazon. And Microsoft, Google, and Apple is just not really making a mark. And Tesla was down also by about 0.77%. So very clear with a very strong upthrust by Amazon itself, okay? Nvidia up by 1.8%, okay? So let's take a look. So what happened is that it comes from the Nasdaq up by 1%, and because now the market is actually really trying to see whether they can time when the Federal Reserve is going to cut rate. So apparently there is a lot of evidence saying that now there's a very good chance the Federal Reserve will cut rate because that inflation is coming down right now, so it's a good time to cut interest rate. I really cannot see how and why people are thinking that way, because Jerome Powell has said so many times already that there will be no rate cuts this year. I mean, my goodness. But Wall Street is just basically pushing and pushing, trying to tell the market that, you know what, probably they are right, things like that. So this is going to be interesting. Now, tonight, it'll be a light schedule because not much data, but tomorrow we have the key inflation data, the CPI data, and on Friday, the major bank earnings. Please take note of that, yep. Okay, so before we go into the Federal Reserve part, let's talk about Jeffrey Gundlach, right? Jeffrey Gundlach is known to be the bond king. He says that, right, he tremendously favors the non-US stocks, I mean, basically, in short, non-US stocks, and call bonds market exciting, all right? Right, basically, he's saying that right now he favors the long-dated treasuries and predict that the yield on the 30-year treasury bonds could go up to 30% in a deep recession. Wow, that's a very big call on this. Do note, bond yield move inversely to prices, yeah? Okay, so basically he said that right now, this is going to be good. Bond market will be very good, and that is where he expects that the things will be massively good for him in the bond market. And he suspects that the dollar will be trading lower because he's looking at there'll be rate cuts coming in, and when rate cut comes in, definitely the dollar will be affected, all right? So let's take a look at the bond market right now. Well, you can see that the bond market for the 20 years plus, the Treasury ETF, the low was $92, $92, and now it's 103. So remember that back then itself, right, when a lot of people are calling that the bond market will trade lower, that was where we say that likelihood there will be some buying soon, and truth be told, right, the big volume comes in, tells you that the market may see some support. And of course, after that itself, right, another huge volume, you can see the price again went up, and of course, if there's a third strong volume, wow, look at the price, okay? So you can see that this bond is actually picking up. Now, if bond price is going up, that means yield is coming down, right? Exactly. So that's the reason why now the market feels that it's time to expect the rate cut further. But do note, if the bond price is coming up, that means that there could be a chance of equity market coming down. So this is something that you must take note of that, yeah? So World Bank makes big cut to its 2023 growth outlook, says that we are very close to a recession, okay? And it says that now the global growth is looking at 1.7%. Previously, they're looking at 3%, okay? And but of course, Federal Reserve during Powell's sharing, it says that Federal Reserve may have to make unpopular decision to stabilize price, okay? So which means that, right, they will try to potentially continue to raise interest rates so that the market may not like it. So that's why I say that if Jerome Powell have already said that, and credibility is so important to them right now, I cannot see why Wall Street is saying the other thing, all right? I just feel that Wall Street itself is trying to be funny here. So let's watch what Jerome Powell say through the mouthpiece, all right, from CNBC reporter, all right, Leisman. Let's go.
in a speech largely focused on central bank independence and less so on the economy and monetary policy. Speaking in Stockholm, will say that price stability is the bedrock of the economy. They'll say it provides the public with immeasurable benefits over the long term. However, he says restoring price stability with high inflation can require unpopular policies, at least in the short term. Then he turns to his general topic here, which is that the Fed must continuously earn its independence and do so by delivering on its mandates of maximum employment and price stability. Preserving the Fed's independence means that Powell says we should stick to our knitting. The Fed should resist, he says, temptation to, quote, broaden our scope. And then he goes on to say that new goals for the Fed without a statutory mandate from Congress can end up threatening the Fed's independence. Specifically, he talks a bit about climate change here, saying climate change policy should be...
All right, so you can hear for yourself, right? It's close to our knitting, meaning that they should, Federal Reserve say that they will stick to what they are good at and they'll continue to do it. And that means that there will be more rate hikes coming in. All right, so this is why I understand what Jerome Powell is saying, but Wall Street just just looking at it from a different angle. All right, now let's talk about the difference between the Morgan Stanley and JP Morgan and Morgan Stanley. All right, so JP Morgan trading desk sees the S&P rallying up by 10% on the soft inflation data. Well, this is what happened. This was the article in December, and basically this is a video to explain why they're looking at that. And of course, we also have Goldman Sachs coming in, and they are also pretty optimistic with the market right now. So let's hear this, watch this video and see what they have to offer. Let's take a look. Okay, here we go.
The volatility, especially on those CPI days. Let's bring in Chris Murphy's co-head of derivative strategy at Susquehanna Financial Group. Chris, it's nice to have you with us, and give us a sense on how you're preparing for this very busy week, arguably the busiest before we get to the end of the year.
Yeah. Okay, I think this is not the video that I want to upload to you. I think I lost it. But never mind, let's skip it first. So basically, JP Morgan is actually looking at the trading desk, is looking at the S&P going higher, because if the inflation is really coming down right now, definitely that means that earnings should be okay, right? So that is what JP Morgan is saying. But of course, I beg to differ, because we all know that if inflation is actually coming down, earnings will be affected directly, which means that, right, the earnings numbers will go down instead, all right, and that will affect a lot of things, and that's where I cannot agree with what JP Morgan says. But of course, at the moment now, the market is still pretty strong, so who knows, maybe JP Morgan is right. But then we look at today, this the CPI data for tomorrow. So apparently now, right, the market consensus looking at approximately 6.5. Okay, so the consensus looking at 6.5 right now. And of course, the probability of this happening here between 6.4 to 6.6 is about 65% according to this JP Morgan. And of course, if that really happened, the S&P is expected to rally between 1.5% to 2%. Now, the last time when JP Morgan says this, it was pretty spot on and they were pretty correct. All right, if the CPI data come anything lower than 6.4%, which is the probability of 20% only, wow, the S&P 500 can rally up to 3% in a single day. But the thing is here. If let's say the CPI data is anything above 6.6%, oh gosh, there is a possibility to see the S&P down by 2 to 3%. So if you ask me, really guys, I really feel that the number will come out between 6.7 to 6.8. I just cannot see how it can go down to 6.5. I mean, I can be wrong, but I'm just telling you that this is my personal view here. So if you ask me, right, I think that is like, the last is 7.3. So to go down to 6.7, 6.8, I think it's pretty normal, all right, pretty fair. All right, because with the oil price coming down, some of the commodities coming down, I can buy that. But anything lower than that, I just feel it's overdone. Yeah, okay. But of course, we have another view from Morgan Stanley, Mike Wilson. He actually tells people that to brace for more than 20% stock drop. So one of them is looking at 10% upside. This guy is looking for 10, 20% downside. Okay, so this is again very different. And the thing is this. He expected that after you're going to pull back first, then later on itself, the market will recover, right? And he actually says that right now, the first half of the year, we do expect some selling pressure. then after that, the buying will come in. So let's watch what he has to say for us today. Let's go. Morgan Stanley. Okay, Mike Wilson, let's go.
Yes, warns the recent market gains signal a disconnect on Wall Street. Mike Wilson is Morgan Stanley's chief U.S. equity strategist and CIO. Mike, great to have you with us.
Thanks, Melissa. Good to see you.
So everybody thinks the first half of the year is going to be terrible and the second half is going to be much better. But you say that maybe people aren't anticipating how bad things could get in the first half. We're just about to embark on earnings season. So is that going to be sort of the rude awakening in terms of really, truly setting the bar lower for earnings estimates?
Yeah, look, obviously we don't know exactly how it's going to play out, but the reason we asked that question in this week's notice, because that's how we're set up too. I mean, we've been talking about kind of a softer first half, led by growth disappointment and, a Fed that's still fighting inflation. And then hopefully that will lead to, the next bull market. Ultimately, that could be a pretty good second half. But, we're all kind of creatures of checking our own, calls. And I just wanted to kind of be sure that we weren't part of the consensus that would get fooled. And so we just asked the question, well, what could go wrong with that? And I think one way they could go wrong is when we actually talk to people, they talk a bearish game about the first half, but they're not really either positioned for it or they don't really think that it's going to be that bad. Even though I would say a majority of institutional clients think we're probably going to be in a recession, they don't seem to be afraid of it. And that's just a big disconnect in my view. Now, there's also a chance we could avoid a recession, and maybe the recession or slowdown gets pushed out to the second half. That's the other way we could be wrong. But the one thing that we feel confident about, Melissa, in our work is that we do think the earnings are too high. We think that's another area that investors are being a little bit complacent. And we do think that this earnings season will be the beginning of the reset on 2023, which is really what's going to drive stocks. The full year estimates have to come down.
All right. All right. This video is about 4 minutes, so you can watch it on your own. I'll put the link into Trade with the Boys Facebook page. But the point is this, he's saying that seems to be a disconnect right now, which is something that I've been mentioning. Because the S&P 500, as you can see on the screen right now, is actually trading higher. You can see on the screen right now, it's trading much higher. And of course, the Dow Jones itself is like, wow, you can see that we are not too far away from the all-time high level. And the Nasdaq, right, seemingly has found a little bit of a bottoming out period. So the thing is that to call for a sell right now, I know that not many people can accept this. And of course, that's the reason why, again, I've been telling people that, need to be very, very careful. But people around me say that, no, things is okay. So now we can see it on the chart right now. Let's take a look on the screen. Okay, let's take a look. One. You can see that this is the mighty 3,900 level, which I mentioned yesterday. And we saw it closing below yesterday. I mean, the day before. Then yesterday, we saw the market going above it. It's like the market is challenging you that you're telling me 3009, I don't believe in it. I'm going to push it up. And the thing is, the volume itself didn't really accompany it. So I'm kind of skeptical right now. I just feel that this whole momentum itself is really purposely pumped up. Okay, I just feel that if you want to be very, very safe, you can look at 30. You can look at the sell at somewhere around here at 39.60. All right, 39.60, so that you can sell somewhere around here to be safer. Now, if Morgan Stanley says 3,009 is a sell, then obviously 3,960 is a better sell, right? So if you ask me, I think that is how I feel it right now. I can't see the reason for buying, I'll be honest with you. Yep. Then of course, this particular instrument VIX yesterday, we can see VIX came down to 20, all right, down by about 6%. That's a lot, okay? But the thing is, I like it because why? Every time before the market bottom out, right, you can see that the market will come down quite a fair bit, close near the low, and then subsequently itself, the next day, is always a green candle. So tonight, I feel that there will be a green candle. I feel that way. So I'm going to look to buy VIX later at 20. I think 20 is a very good price. I don't think you go to 16. 16 can be my stop loss level, which I really wouldn't want it to come to there. But I think that 20 is a good price. And 20 to go to 26 itself is pretty kind of expected, yeah? So my view is this. I think that VIX at 20 will be a good buy, all right? And of course, there's not only me looking at that. Apparently, there is a particular website and actually tells you that there are people now expecting the S&P 500 to drop down to 3,500 level. Now, where we are right now is at 3,950. So these are the recent buy into the market. and they are buying now a small quantity like $1.5, $2.2 million worth. So it tells you that maybe people are really looking at that, and the expiry they're looking at in April. And I've been saying that most likely we'll see the market pulling down all the way until March to April period. So all this basically tells me that maybe my call on the Dow to come down or the fix to buy could be actually right. All right, so you make your own decision on this, guys. All right, now do note my coming preview on the 14th of January is coming up, and a lot of people have signed up, more than 60 people. Thank you so much, guys. Now during this preview, it's 2.5 hours. I will talk about the macro picture and how to utilize our TWB system to really benefit from the market. And the version 6.0 will be out later this month itself. So for those who are attending the class, you can actually have the 6.0 coming out absolutely for free once you join the class. All right, so we are very, very pessimistic at the moment right now. We believe that there could be extreme volatility after mid of January. So which means that after 15th of January onwards, I suspect that there will be a huge volatility in the market. And you can see we don't lie about our numbers. We say that more than 50 has signed up at the moment now, about 68. We really hope to hit 100. So please, guys, if you really want to know what will happen for 2023, the first quarter, then quickly forward the link to your friends and let them join and register for it. And of course, I do have proven record. Of course we have, all right. We're going to conduct this sought after basic class. Now, last year we done it a few sessions and people liked it, but because we have lack of manpower, so we actually stopped it for a while. Now manpower is back, so we're going to restart this TWB basic class, all right. So it's definitely much cheaper for compared to my Premier, but of course the information itself will be a little bit lesser, but I'm quite sure once you enjoy this, you go for the Premier class. Now, recently, we've been very busy because we were looking at how to make sure our students profit from the market. And we just have a very nice, beautiful track record for 3 months already that the last 3 months I was away, right? I told you guys I'm very busy to make sure my traders do well. Now, my traders basically traded on their own account, and now they're up by almost 50% in just 3 months itself, all right? And it's not only that one-sided trade. We don't do one-sided trade. We trade both sides. So we have long calls, we have short calls. You can see over here, 64% on the long side, 52% was on the short side, all right? So, of course, what you try to, at the end of the day, we try to profit from the market, and we have proven ourselves. And now, at the moment, I have a few more traders that are doing well. So, that's why I say that TWB has a winning tool. So, guys, join us in the next TWB preview this coming Saturday, all right? All right, let's look at the chart right now and see what we have for today. Let's take a look. Now, first of all, we can see the market now for the US Dow Jones. Okay, let's take a look at the moment. The Dow Jones now is still trading above this KFC level. My KFC level is the 3,031. So as long as the Dow Jones stays above it, there's really no reason why the Dow might come down, right? So that shows that the bullishness here, the potential upside could be all the way to 34,000, right? I've been saying this, 34,000 could be next if the market stays up. Okay, this is something that you really have to take note of that. All right, then for the NASDAQ, we can see that it's still really below my KFC level. So there is a possibility that the NASDAQ, this rebound itself might be stopping around here, and a pullback back to 10,800 is actually really possible. Yep. Okay, and for Hong Kong, Hang Seng is still very strong above my KFC level. Now, KFC is a tech indicator that's available for PTP, all right? So I'll tell you more in details when we have the preview on this coming Saturday. So the thing is very incredible is that now, let me just do the period separator to make sure that I can see this better. You can see that, right, for the start of this year right now, for this January, we have 1 doji, 2 doji, 3 doji, 4 doji. Now, this is incredible. There are 4 dojis on the Hang Seng. That means that the next few days, we're going to expect a pretty big movement. Now, the upside itself, right, we can see the Hang Seng potentially can go all the way to this point here itself. Let's make it clearer. The market can go all the way to 21,000 to 22,000. But on the flip note, if something terrible happens, the Hang Seng can come down all the way to 20,300. So where we are right now is 21,500, right? So upside potential is about 500 points. Downside potential can be as much as almost 1,200 points. So traders, you make your own stand here yourself, okay? All right, let's look at the charts for today. This is the Dow Jones now. Let's take a look. For the Dow Jones, is trading above the BNB RL level. So the BNB RL level is 33,481. So as long as the market stays above MLP, above this BNB RL, we can see the Hang Seng, the Dow Jones going towards the 34,000 mark, right? That's something that I mentioned before. All right, KSI and KRW, both of them are positive right now, although there's no sign, but at least flat is considered positive. So that's why you can see the green arrows there. So the market is trying to push up, but it seems that there is a strong resistance at about near the 34,000. So traders, just take note of that. Yep. For the Nasdaq, let's take a look. The Nasdaq, although it's coming down, but it's now trading below my pivot one, 11,184. So if the market stays below that and breaks below MLP 11,157, we can see coming all the way down to the BNB RL level, and that's for 11,087. All right. Then the upside could be as high as 11,255 to 11,340. Okay. All right. Let's look at the S&P 500. Quick one right now. S&P 500 has climbed above the BNB RL level yesterday. So by right, it should be going towards the 4,000 mark. But with the current situation right now, and the market is going to test the BNB RL level at 39.09. If the market breaks below there, I suspect that you'll come back down to 38.79 because that is the MA30. And this particular level itself, right, is very important because that was the point to basically tell people that the bullishness is still on or is no longer there. All right, so take note of this number, very, very important, 38.79. All right, so that is the 3 US indices. Let's look at something else like the crude oil. The crude oil, let's take a look right now. The crude oil has been mounting up very, very steadily. But the thing is this, that if the Europe side continue to do what they want to do to bring down the crude oil price, is Biden want to do that by releasing more oil from the reserve, then oil can come back down to $71. Okay, it can come down to here. The upside itself, I think, will be more resistant at the BNB support level, and that will be 76.56 range. All right. Now, for time being, right now, you can see that KSI is red, but the KRW is cyan, so there's a bit of mix here at the moment now. So don't expect bigger movement unless something breaks back. Okay, so that is where the crude oil is. Let's look at the gold and silver market. Now, this today, many people trying to ask me, is there any news on it? I say no news at all. Now, silver has climbed back above the BNB RL level, which is at 23.51. So if this is going to push it up, right, we can see as high as 24.86. Okay. All right. As long as the market stays above the BNB RL, there's nothing to be worried about. Okay. It was just very, very clear that it's seemingly waiting to test the 24.86 level. Yep. Okay. So let's look at Bitcoin right now. Oh dear. Hold on a minute. Is there any issue here? I think we have some issue with the... Hold on now. Okay, I thought to okay, some little error here on my site. Silver diamond. Okay, let's look at Bitcoin right now. Without a Bitcoin, let's take a look. Now, Bitcoin has just crossed past my BNB RL extension yesterday and the day before, and now it crossed even strongly. And now it's trading at 17,420. Now, I did mention that likely Bitcoin will hang around will hit around 17,000, which already have happened. KSI is green and no blue bars show that the bullishness is still pretty intact. Yeah. So if you really want to sell this Bitcoin, you must wait for it to drop below 17,370, then you can sell. If not, right, for today, there's still a bit of potential to see 17,600 level. Okay, so traders need to watch out for this. All right. Let me just show you a China chart, quick one. China today has pulled back a bit, right? It was up for 4 or 5 days. Today will be a pullback, but it's still pretty strong at the moment. So most likely we will still see upside for this particular market. And the thing is this, for traders, just take note that I'm just very negative with the current situation right now. So if you are not keen to go long, just go slow, and wish you the best. All right, this is Cal signing off. Have a great day. Do leave a comment on the comment box for me to get your chance to have lunch with me, and also sign up for my preview. Okay, bye bye.